Welcome, everybody. Today is June 5th, and just wanted to review some lessons that we did in class today that were just really, really powerful. As you look at your educational material, again, these are the trades that have high probability. The red areas are the areas that have very high probability to reverse the trend. And we did some really powerful lessons in class today. And again, one of the lessons that we have is, whenever an area gets hit, such as, 165 EMA, and we've got a big gap back to our triggers, this is one of the examples of today, we can quit doing trend trades long on the big chart and, again, wait for reactions. And I think one of the biggest things, and this is some footage from this morning, but you'll see this is a situation on our 14-2 chart where we have a 165 EMA and very easy to see that we have a very large gap back to our synthetic triggers. So again, if you did a long trade here, that would be okay. But once we reach an area and we've got this big gap, we do not want to do any more long trades until the area that causes trouble breaks, or really, I think the biggest lesson that we had in class today was if the area that causes a reversal does actually make the trigger lines roll, you're going to get one opportunity on the small chart to take a trend trade to either close the gap or further. And again, this lesson is repeated daily, every day. Every day you watch the market. Let me go back here and show you. Here's an example. We get to a fib, okay? And when the triggers don't roll back up and help the fib, we wait for, and again, I know it takes some time, for the trigger lines to roll back down. So essentially breaking a fib with the triggers down, then we take a short, maybe two shorts. And same thing over here. Let me show you. This is one of our trouble spots down here. It's not the trouble spot itself that's going to cause the trade setup. It's when we have one of these conditions. Number one, we're going to stop doing shorts. And then number two, if the trigger lines roll, we'll actually do long trades. So again, this is one of those situations, and I'll show you a few of these that we went through today. This is a situation that says stop long trades. That's it. And again, I want to show you in this picture here, down here, take a look, price on the 14-2 chart, and really these are all 14-2 chart looks. 14-2 chart touching a resistance and a big gap to the triggers. And again, that's the picture, from the example. And this is what it looks like in the real world. So the only thing you have to know at this point is stop doing long trades unless this area breaks. And if the triggers roll, maybe we can do one short trade. All right, so now we're at this point, and I just, again, I want to reiterate, I want to bring in the 5-1 chart for you here for a second. So take a look at the large chart. Again, we've already declared we're going to stop doing long trades. And the biggest mistake that new users of our software have is they don't know when to stop. And what they'll do is they'll look at their small chart only, and they'll lose sight that we have a condition up here that says stop. So again, not only do we have a couple of divergences at the top, but we also have the big gap on the big chart. And that really is kind of like a double whammy. This double divergence adds to the fact that, again, if you try to buy down here, which this would be our long spot, you're going to end up with a failure most of the time. I mean, every once in a while it's got to win, right? So, but most of the time, and that's really what we're trading for, is we're trading for 75% of the time. So I just wanted to kind of stop this, midstream, because if you're only looking, at your small chart or your large chart without, the complete picture, you're going to see trend trade long. And I understand that, but When we hit the area and you've got that gap, they usually are going to get down to the triggers. Sometimes they get all the way to the fib, and then sometimes they even keep going. Just kind of depends on how much speed they pick up. So again, the most important lesson is number one, know when to stop doing long trades. So once you make that declaration, don't worry about what happens on the small chart next. What we're looking for is if these triggers roll and come down here, we'll get a short trade. So I wanted to go just a little bit further in this, and you'll see, had you have gone long, you would have lost. And now you can see, number one, if we have a condition to stop doing long trades and the trigger lines roll, look what we have right here. We have a condition that is a very, very strong trigger below red Fibonacci areas right there. And this is going to be our sell area. Literally, that's going to be the sell spot for us. That's the spot where we're going to end up taking a short trade. And you could really almost put in an order there knowing, that you're going to get a short trade there. So watch how this works out. All right, so again, just kind of midstream, you can see this is what it looks like as it pulls back. You can see inside of this box, this is literally our perfect trend trade short look. And again, it's very strong down triggers that have broken, back below our resistance after one of these red conditions. So it's just like this almost. This is the one that I'm playing. The gap, the strong triggers down, you're going to get at least one short. So watch. Again, this is, again, how it kind of progresses here. And you'll see, I've kind of got this on a higher speed, but this is really what we're looking for when we're looking at, doing these types of trades. We're looking at, again, getting in with a condition. So you want, I'm not saying you want a bad condition to happen. What you want is a condition that potentially could reverse the market. And the key to success is really waiting for the trigger lines to confirm what it is that you're seeing. So we'll show you some other lessons that we've taught in class today. Okay, so one of the other lessons that we taught today was there's a couple of things. Number one, if we have, there's a couple of things to work with, okay? So number one, we have potential divergence here on our chart, and we have divergence on our little charts. So both of our little charts have divergence. Let me show you this. So all three charts of ours have divergence, and that's okay. I mean, it's been a strong trending down market. One of the other things that we talk about is actually doing trades from the last areas. And again, this is one of those situations where, our market flow system can save you from, some bad trades. So again, this is the spot. So we're looking to take a short trade. And what happens is if the market goes and makes a down bar here, we're going to do one more short trade. And again, I'll pause it. So again, let me just show you in the situations where that causes trouble for us. So again, all three charts have divergence. Obviously, if we have Fibonacci's there, it's going to cause the market to reverse. And you'll see this happen a lot, and you'll get used to seeing it, but especially once you have a down bar on the big chart with three divergences, the party's over. So what does that mean for us? Well, it means the same thing it meant up here at the top, except in reverse. We'll stop doing short trades. Now, that doesn't necessarily mean we'll get a long. What we need to have is conditions for a long to happen. So the only condition that's going to make a long trend trade happen that's high probability for us is what? It's very simple. It's the same thing that happened up here. We're going to have these trigger lines roll up and come up here, and then if they help the Fibonacci area, we'll buy Fibonacci. If not, we'll wait for them to roll back down and we'll go short again. So again, it's, one of these situations where the rules say stop doing shorts, and then we'll see if we actually get a long trade out of it. All right, and you can see this is how it progresses. You can see that our small triggers are now very, very wide. And again, you have to kind of anticipate they're going to come up and meet us right here. You can see them really steep to the upside, which means the next bar up, they're going to end up here helping this support area. So again, when we start thinking about long trades, we start to put the pieces together. Three pieces. Number one, stop doing short trades. Number two, we had some new Fibonacci support pop up on us between 43 and 45. And again, this is small chart helping us. And then when we go down to the entry chart, which would be our market flow chart, you can see, I mean, this is basically, between 42 and 44 is where our long trade is going to happen from. And again, it's all conditional. It's divergence on all of our charts down here tells us to stop. And then we get down into a situation where we have trend trade rules become true on our smaller charts. And again, this is a situation where it's the first, really trade against the trend and we have prior divergence highs. So, maybe we don't take quite as much if we get up to resistance. And as this, progresses, I mean, we could get down a little bit lower here, but you can see our triggers are coming up. Once we get an up bar on our 5-1 chart, then we'll know, obviously, we get to trail our stops and reduce our risk. And you can see that's happened here. And essentially, we could get it to about break even. And, again, it's conditions. So again, I really want to review this because it's very, very important that you understand when to stop doing a trade. And then if you get the right conditions for a trade like this, you're going to get one really good high probability trade. And then obviously, maybe a couple of, easy trend trade shorts to the downside with everything going down, which we didn't really talk about those. The ones that are easy. So, not a big deal. The ones that happen conditionally after stopping short trades because divergence on all the charts and the triggers rolling up, those are the ones that you really have to focus in on your 14-2 chart. Now, again, we have a situation here where what? At the moment, we really are starting to run into a midband. So unless these triggers really, really get going up above the midband here, which would end up putting us into a buy situation at the same Fibonacci support spot, and we'll see what happens. All right, so I want you to see just structurally what this looks like. And you can see the triggers are way up past the area here. So, this is a situation where, again, if we get back to this multiple time frame fibs over here on the small chart, and again, I want you to really think conceptually about this. Number one, usually we get, you see this little divergence line? We'll get what we call a pivot stop out. And you'll see this happen all the time at key areas. And essentially what this means is that we're going to get down and we'll get down right into our support, right into the top of our trigger lines. And usually after they stop out this low by one tick, well, you can see the prior low, we'll end up with a long trade. And you'll see that's essentially what happened. I mean, we came right down into this area, very, very, very tight window for a trade setup. And, again, because our triggers are still crossed to the upside, we'll get a bounce off of Fibonacci support. We almost always do. Now, what'll happen is as we go through and start managing trades, there's two areas of resistance that we'll run into. We'll run into one right here and we'll run into one right here. And again, what we have to gauge is how strong is this big chart? preferably for us, we would have liked to have changed the color of the midband. That's really the number one key thing for us. So again, when the triggers stay up this strong and we get a couple bars down, we get the opportunity to, again, lower risk trades from the edges. And again, this is what it looks like on our market flow chart right here. So just to kind of show you what it looks like. Again, this was the spot. I mean, literally 1 or 2 tick window. And again, once we get white paint bars to the upside. Again, this is how we manage trades. So again, not to get too much into the management of trades, but you know, two things you have to understand. Which way is the market going? And then number two, where is it going to bounce from? And there's many, many times where we get multiple attempts at the same area. So, and if it goes back up to resistance, we'll have, 25 ticks out of it pretty easy. All right, so as we navigate the day, so we got a bounce and unfortunately we came back down. And, here's where a lot of traders get in trouble, right? So just watch the triggers here. You can see they're very strong down. We have blue Fibonacci. And, again, you're going to see this in the trading plan a lot where if you get to multiple Fibonacci areas. So watch what happens. Let me just kind of show you here. If you get to multiple Fibonacci areas, you have to stop trading the market. One of the trade setups that we have just so happens to deal with our high probability trade setups. Take a look at this down here. We want to go long at blue Fibonacci support, but sometimes the triggers get below the support. So one of two things is going to happen. We either have to wait for the support to turn red, or we have to wait for the triggers to go green and help out with a long side. That's it. So again, don't be fooled by triggers going a little bit past an area when they're going to end up rolling back up. And again, we spent a lot of time in class with this. And, again, here's what it looks like on your small chart. It's a very inviting short trade, right? I mean, literally, you could just go short right there, right? This is a trend trade short. And again, it's not that you necessarily will lose your trend trade short when your triggers are below. It's not high probability. So again, some people did this trade, so I'll mark it for you so you can kind of see it. But we spent a lot of time on this in class. And again, it's not that this area won't push the market down, because it actually does. And people did a trend trade here and they actually made a little bit of money. But what traditionally will happen is, again, you'll see potential for divergence on the big chart, potential or actual divergence on the little chart. And then when we get divergence on the smallest chart, the range bar chart, which will happen over here, or multiple divergences on one chart, we're going to get really what we want. There's two things that are going on here. Number one, and again, you have to really, really, really understand, and it takes a little bit of time to get this down, but watch. If you have divergence on all of your charts, the market's going to go the other way, maybe, or it'll break, either one. So we're not sure whether it's going to break yet or whether it's going to cause a reversal. So again, for us, and again, the whole lesson is predicated on the 14.2 chart. So we don't have to actually know anything except what? Don't do any short trades. And then if the fib turns red, we'll go short, because that means it goes a lot further down. Or very simply, and this was our lesson in class, if the triggers roll up, helping, we can go long. So it's a conditional thing. You get the stop order from the conditions. Stop and wait. That's basically what we say in the plan. Look, knowing when to wait for the trend to either reverse or continue, which is highlighted by the small triggers on the 14-2 chart rolling and helping, or the area breaks. One of the two, there's only one of two things that can happen when you're in an area. It's either going to go up or down. It's either going to hold or break. And this is really where kind of the magic comes. Sometimes you get a fib and you have to wait for the triggers to roll. And again, that's what we had in class today. So this fib, I'll give it away early, the triggers are going to roll. So let's look at that. All right, so picking back up where we left off in class. Well, guess what's going to happen? And you already know at 43 and 46, we have multiple time frame Fibonacci support. So it's a cumulative effect of stop doing short trades, number one. Number two, because the condition held and our triggers and our fibs now agree, we can do long trades. So this is the only time where you go to your small chart and say, where's my long trade going to be? And again, we've kind of used this area several times today, but look, triggers are up, 44 to 43, triggers are up, pivot stop out, 43. Guess where our order is going to be, guys? I mean, you don't even really have to guess, do you? It's going to be 44, where our fibs and triggers are, because that's what we do. So we wait for the 14-2 triggers to be with us and at the right spot. And again, I know obviously what our trend trade rules are going to be before we get them. Rule number one, 14-2 triggers are crossed up, which means rule number one is you have a green background on your small chart. Rule number two is after a trend change, right, we're going to pull back to our 14-2 triggers. It's just the way it is. So not only do we have our triggers going up here, but we have multiple time frame Fibonacci here. And you've got a couple choices. You can get in at the spot if you're really, really knowing the spot. The secondary entry is, getting to the spot and allowing the market flow strategy to get you into a position. And again, let me show you what that looks like. Because if you were waiting for the market flow, you wouldn't even be in yet. You would have the market flow on and the buy next reversal and long on. So that way, when it actually generated a signal, well, you can have that on, but watch, I'll show you. When it generates a signal, you can get in. I'm already in, so it's not going to put me in another one. But you can see this is the whole thought process. And then obviously we want to manage our trades, right? So again, when we get pivots and white paint bars, we're able to get to a very, very low risk, if not even a break even. Now, I want you to think about this trade setup. We got to get through our trouble spot. So let's take a look at our large chart. Large chart is what? And again, you can see this is the look that we're looking for. Stop doing short trades, triggers rolling over. Now we really start to think that we're going to start reaching, some higher Fibonacci areas because we've got divergences on both of our small chart or big chart. And there's really no resistance until we get up to here. So usually as you start thinking about, the bigger trades, that's where the bigger trades start to happen. So again, think about process. It's stop taking short trades, wait, triggers roll over, you're okay to take a trade. Same thing up here at the top. Stop taking long trades. Wait, 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 wait. Triggers roll over. Now you can do a short trade. At the bottom, 3 divergences. Wait, 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 wait. Maybe one trade didn't follow through. 3 divergences again. Now the triggers roll up. Now we get to take a high probability trade. And again, this is the same, thing over and over. Remember what we said earlier about this mid-band on the 14-2 chart and strong triggers going up? This is a favorable look to keep taking long trades. And again, one of the things that we really would like to see is that this mid-band changes colors. If this mid-band changes colors, we're going to have more high probability trades to the upside. So watch, as this progresses forward here, I'll stop it for a minute. Can you see it? It changed colors. So not only do we get divergence at the bottom, not only do we get a great long trade at Fibonacci support, now the market has told us it's okay for us to look for our next trend trade. So look, now and only now do we go to our small chart. So again, I drew a box in on the large chart where the midband is. Can you take a wild guess at where our long trade is going to be? Somewhere around 62. We'll just put it at 63. So somewhere between this area and this area is where our long trade is going to be. And again, we have to ask ourselves, does it jive with what's on the large chart? Are the triggers really, really, really strong on the large chart? Are we going to be pulling back to Fibonacci support and midbands on the small chart for the rules to be met? Have we reached any lines of resistance on our large chart? No. So this is, again, as you get into the plan, right? One of the best looks that we have is what? Everything going up on the big chart, nothing in the way. And then we buy the pullbacks on the small chart and make those trend trades. So again, we'll come back to this and let you see how this progresses. All right, so real quick, even I want to take you to the large chart before you ever see the small chart because it's imperative that you see this high probability look on the large chart with the mid band and everything right there together. Look at your trigger lines, really, really strong to the upside. So this is the second long trade. And when we go to our small chart and we're talking about what trade are we going to do? Again, you can see, we could have got a few ticks better, but traditionally, a little pivot stop out, we're going to be good with that. So again, as this trade progresses, we're going to reduce our risk per the rules. When? When we make an up bar on this chart. So just in case they come down just a little bit lower and they actually get to the fib, right? So because we had prior divergent stop outs, again, look, I'll show you on the market flow chart too. We also had a long signal on our market flow chart. So again, if you were waiting for a market flow signal, this is also, the signal that would get you into a position. And again, you can see obviously that a little bit lower is probably, a little better spot, right? So, you could, some people even add on if they get to the best spot. So, again, big picture. This is what we're looking for. We're looking for what? We're looking for Fibonacci resistance for targets. We're looking for prior highs or prior lows for targets. So where are we going? Well, we're probably going to at least 46.99. There's nothing else in the way. So again, for us, one of the things that we like to do is what? we like to get in at the right spots with the right conditions. And again, it's a little bit scary because, the market's going down at the time where you're getting in. So super strong trigger lines, mid-band changing, trend trade area on your little chart. And you can see, 60 is the perfect spot. So again, you don't really need your big chart anymore once you've, established your trade setup here on your small chart. So again, prior divergence highs, always a really good target. Pivot stop outs, really good target. And obviously, the objective eventually is to go from Fibonacci support up to Fibonacci resistance. And again, once we have that pivot to the upside, we're able to reduce our risk right behind the pivot. So, look how much risk we have. We only have, getting the right spots, barely any risk in this position, literally ticks and only going against us a couple of ticks here. And then obviously, one of the things that we do is trail our stops up behind white paint bars on the market flow chart. So again, I don't want to confuse you too much with all of the bits and pieces, but short version is the right conditions, the right areas, the right trades. And again, to make 15 or 20 ticks, trailing your stops up, pretty easy. All right, so one more lesson that we had in class, and again, this is what we were talking about in class. Trend trade long after the shift, trend trade long. And again, look, can we do one more trend trade long? And the answer is if the triggers move, we do more longs. And again, the market came all the way down and we had a pivot stop out down here at the bottom. And again, you'll see this is literally the last spot where we can take a long trade from. And as we trade back up into the trigger lines from the wrong side, we trail our stops. So again, same thing. Triggers are strong, triggers are moving, we're doing trend trades. Pretty easy. And again, now we've got, condition-wise, look what happened. The background color has changed on our large chart. So again, we start to build this larger gap back to our triggers. We're coming now off of the 165 EMA. And traditionally, this is the last trade that we're going to end up doing to the long side if it doesn't follow through all the way. So, yeah, that's going to end up being about the end of it for now. And again, once we have the area where we're not going to do any more long trades from, again, we've exhausted really 3 high probability long trades. So again, just recapping things. Stop doing long trades. Triggers roll, short, short, short. Stop doing short trades. 1 long, 2 longs. Stop doing any short trades if you're even doing short trades after the trigger lines roll on the 14-2. Now look, same rules. Again, we've got, the background color changing, which is really nice. But look what happened last time. Stopped doing long trades and we rolled over and went down a lot further. So we're at that 165 again with the big gap. So that's it. No more high probability trades until something else happens. All right, now this is the other condition that can happen. If the market decides that it's not going to go close the gap and pushes through that last line of trouble, now we can get back on trend trade duty until we get up to resistance. So again, this is just kind of a recap of class. I know this is getting a little bit long here, but I want you to think when you're looking at our trading plan. You have to have one of these fantastic looks in order to do a trade, and it's really, really high probability trades when you get that look. If you get a look that says stop doing a trade, you can take a trade going the other way if the trigger lines roll over and you've got, a really good trade setup. And then the other flip side of this is what we just had right now, and why I put this in here. We have areas where, again, we get to take a couple of trades going up to that spot. And then once we get to that spot, we have to demand that the trigger lines and everything get beyond it. And then now it's broken, and we're going to end up continuing to the upside. So again, conditional. Hit the area, triggers roll, you got fibs, go short, go short, go short. Conditions, triggers roll, you can take a long. Conditions, triggers roll, then you take a long, then you take a long, then you take a long. Conditions are hit, wait, 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 wait. We break through. Now it's okay to do long trades again. So again, hopefully this little bit of instruction in our class from today has been very helpful for you. Only do high probability trend trades and wait for the triggers to really look like one of these setups. If you get to a stop area, force yourself to just wait, be patient. If the triggers roll over on the 14-2 chart, you can take a trade. If you break through the area, you can continue trading with the trend. I hope this is helpful, and I look forward to seeing everybody in class tomorrow.